We are off to a good start. Markets are suddenly not worried about budget. Nobody's talking about elections. Everyone is saying Jai Shri Ram, right?
Vote on account, so one shouldn't buy a vote on account. And you're right, political stress has been taken out of the way by the assembly election results. Where I think the degree of optimism that I'm seeing kicking in, leaving aside budget and the political outlook, where the optimism actually is warranted is the interest rate outlook genuinely is positive, both in India and in the rest of the world. I know events in Middle East are a little worrisome, and if the rebels and the Houthi rebels and the Israel situation flares up, perhaps oil goes back up again. But leaving aside the Middle Eastern concerns, the interest rate outlook is positive for the country. The growth outlook is positive. Political situation is stable, and therefore on all of those fronts, the optimism in the market is warranted. Small cap valuations do look completely out of sync with reality, but large cap names such as the one we've been discussing this morning, Nikunj, the large cap end of the market, I don't think valuations should raise concerns.
Have you trimmed your position, Saurabh, on any of the mid or small caps that you own?
No, so we continue to be invested broadly in the same set of stocks. Where incrementally we're becoming more comfortable is in the sector which gave us the most pain in 2023. I think, as is well known, we have been large investors in specialty chemicals for several years now. It worked for us for 3 years. Last year, we were absolutely hammered in spec chem because the Chinese dumped chemicals all across the world and in India from May through to October. The Chinese dropped prices of chemicals by anywhere between 30 to 50%, and that hit our investee companies there. November, December, the Chinese seem to have throttled off on dumping. The import data is encouraging for India in that regard. And ironically, with these shipping rates going up, right, shipping rates, container rates seem to have doubled in the last month because of the situation, the terrorist situation in the Red Sea. That implicitly acts as a deterrent on Chinese dumping because the shipping rates go up. It gives a degree of protection to Indian spec chem manufacturers. So we're looking forward to the spec chem manufacturers publishing decent results for the quarter to December, and hopefully, giving the world a little bit of optimism for calendar 2024 in terms of respite from Chinese dumping. We remain big investors in the sector because we believe the China plus one story in chemicals is massive, and we would rather keep loading up on spec chem names at very attractive valuations rather than wait for the uncertainty to abate and then the valuations just rip through. So spec chem is a sector where incrementally we're becoming more confident about the outlook, and therefore names like alkylamines, GMM, Pfaudler, where we've had large holdings, we're staying constructive there.
Enough. What about some of the compounders in the portfolio, the likes of Trent as well, Fifth Tata Group, incidentally, to top the 1 lakh crore market cap? How do you see that as a performer along with an Astral?
So on retail, it's very interesting what's happened in Indian apparel retailing. It's become a very demanding market because of the rise of online and how online and social media has shaped tastes of the Indian consumer. If you're a run-of-the-mill apparel retailer in India, not on the cutting edge of fashion, you don't have sharp pricing, I think you're finding life very difficult. And I think we'll see that in the Q3 results. None of them in apparel retailers are finding the going really tough. All credit to the team at Trent, Noel Tata, Venkataslu. What they have created is very impressive. Not just the West Side proposition, which is a familiar proposition for middle class shoppers, but the Zudio proposition is very, very interesting. I've traveled to now, I think, 40 Zudio stores in various parts of the country. Fashionable clothes, attractive price points, constant refresh. Every 7 days, the lineup is getting refreshed. And if Trent keeps scaling Zudio from roughly 450 stores currently to say 2,000 stores over the next 3-4 years, I think this becomes a massive compounder. Zudio becomes a massive compounder for Trent. And then in parallel, Star Bazaar, we've been visiting stores consistently across the country over the last 5-6 months. We think Star Bazaar 2 is a very disruptive proposition. It's a very different type of grocery retailer to what we've seen in India. And we think the format works. We are seeing stuff fly off the shelf at Star Bazaar. We reckon that's on the cusp of profitability. So on our numbers, this is on somewhere around 50 times earnings. And we think the combination of Zara, West Side, Zudio, Star Bazaar you got a quadruple play there, which could make our clients a lot of money in the years to come. So both in consistent compounders and in rising giants, this has become an increasingly large position for us.